Mr. Tarun Katiyal, he's the CEO of Reliance Broadcasting Network, joins us on the development that they are planning to launch a channel in Bihar, Big Magic, Bihar and Jharkhand. Thanks a lot for joining us, Tarun. Tell us what's the objective of this particular launch and what kind of opportunity do you see by this launch? What kind of penetration have you estimated it would do?
So really, if you look at Bihar, it's one of the highest growing GDP markets in the country. It also couples with a lot of low proliferation of television and regional television in that region, and it has a unique language advantage in Bhojpuri. We've seen there have been some players in the past who've exploited this market, but currently the market is fairly vacant, and we thought that it was a good opportunity to overlay this with our radio presence in that market. So we are the largest radio network in Jharkhand, and together with Bihar and Jharkhand, it's really a market which has a huge headroom for FMCGs, for auto, for telecom, and we being on the ground with radio as well as television promise them a good 360-degree connect in that market.
Tell us what exactly are you planning in terms of strategic stake sale at the company level, because it has been in the works. There has been a lot of interest in your stock regarding it, but nothing has really come about. Tell us, on your planning table, has it been deferred, or some rethinking is going on, or is it on the charts but not exactly in the recent future?
So really, these are things that are strategic in nature. We are looking at our business in two buckets, radio and television. Radio, as you all know, is linked to the phase 3 discussion that is up at the government level. They have released the policy, but they're still to decide on the tender dates and the way forward on that. That will actually allow the organization to move in a direction with the radio business where we will be allowed to bid for another 100 stations, excluding the 45 we currently have. It will allow networking. It will allow us to proliferate markets, both in the metros with the dual frequency and the smaller towns. So that's the radio side. On the television side, we've seen a lot of good news come in because of DAS. As you know, our English network primarily operates in the 4 to 6 metros, and DAS has really helped it springboard. Our reach grew by 100%, and so we've seen a lot of interest in the network come on its own, and carriage costs have come down dramatically, subscription has come in. And as the next set of cities in DAS happens, which is the next 38 cities, which is slated for March, the regional channel network will also actually benefit a lot. Within the central India region where we play out Big Magic currently, we have over 6 cities in UP and about 3 or 4 in MP and another 2 in Jharkhand and Bihar going into DAS, which will allow us a further increase in both subscription as well as reduction in carriage. So the entire TV model, not only for us but for the entire industry, now starts to fall in place. So all of the stake sale and all that will come later once we've really rolled and settled with all of this.
When you say later, is there a timeline defined on it so that, at least from a market perspective, things are put to rest for a while?
One can't predict this on a day-to-day basis, but the way the television industry is going, one would see profitability happen far sooner than what has been the trend, because as you know, distribution is one of the bigger cost lines, has been one of the biggest cost lines in the television business, which is now starting to fade away, which is now starting to come down significantly, down by like 60, 70, 80%. So obviously, one would want to see a very healthy business before one does any of this.
So tell us about your profitability profile. We have seen that your operating losses, especially on the TV side, have been coming down. Give us a sense of by when can we see good amount of cash flows overall in your business, and profitability profile would improve meaningfully. So
there are two buckets, right? Radio and television. On radio, I think we've started to see the return of both inventory as well as yields. The last quarter was fairly good. We ran at a very high fill level across all our network. And, the first 2 quarters of the year had been very tough with the economy, but the last quarter actually saw a significant jump, and, we'll soon talk about that. And similarly on television, the distribution costs are coming down significantly. We're also doing far more and more 360 degree for our regional pack. So obviously we are hoping that some of these channels, which are now about 18 months old, will hit profitability very, very soon. The newer ones that we launch are a subset of these channels, so we're not doing extensive investments in content, because some of the content that gets produced for Central India and Magic will also get deployed in Bihar. And the other big cost item, which is distribution, has come down significantly. So they have a far more speed to break even than the original ones. So we are hoping that the TV business profitability will come in far sooner than we had expected. Radio is already very profitable, and Q3 was even better than some of our quarters in the last 24 to 36 months.
But speaking about specifications, you think from FY14 onwards, post-March, do you think that there would be at least a move in the direction of rebalancing your revenue mix with, which is currently dominated by radio, with close to 60% of your revenues come in from there, with television also picking up on its contribution, both on the top line as well as bottom line?
Yes, that was really the aim, and that's what we're working towards. And as television's costs come down and revenues go up and there's more measurability, we're hoping that television contributes significantly to the business.